So today we do have quite the video. As you can see, past couple of days we have been dropping in the market, just like absolutely insane. It's been pretty crazy. You look at a heat map from today. Oh my gosh, it's just like, this is just a heat map from today. Nvidia's down almost 10%. Oh my gosh. Wait, I didn't even see S&P 500. What was that? Was it almost two? It was a 2% drop at one point today, but wow, almost 2% drop in the S&P. Like, it's been absolutely quite the bloodbath, right? So, but in today's video, I'm not going to waste your time. We're just going to get into straight up what are the best things to do when the stock market is dipping, and this is going to be all the advice that I've learned from Warren Buffett over the years. I'm going to go over my top 5 best things that I have learned from him, and I'm going to be putting them in my own words. These aren't going to be some quotes, but I'll show some quotes at the end. But yeah, so I'm not going to waste your time. I'm not going to tell you like, subscribe, do any of that. You're already here. So let's just get straight into the video. So, all right. So yeah, I just showed you the current state of the market. You see, recently we've dropped from all-time highs, from the beginning of the year, last year, going from quarter 3 to quarter 4, we were seriously, on a huge winning streak, just absolutely just monster winning streak. And yeah, we've quite fell off a cliff from the past 2 days. But yeah, so now we're here, and there's things you gotta know. So this is probably the first drop. Oh, sorry about this. So this is the first drop for most new investors. Congrats if you're a new investor, and this is the first ever stock market drop. I didn't say crash yet, but like first drop in the market for most people. So congratulations. You're starting to experience some big events, right? And most new investors will be freaked out and pull out all their money, right? Like, I know some people, even personally, that are super scared. They're like, dude, you were like hyping up the market so much, and now all of a sudden, you're super, like, everything's going down, and they're super freaked out, and they're just like pulling everything out. They're like, you're stupid, why are you still investing? So things like that. So like, do not get freaked out. We're going to be talking about that. And yeah, so I said experienced investors will constantly be buying the dip and being grateful for these prices. Like, this is not, for experienced, seasoned investors, whatever you call it, like, they're actually happy because they know what's going to happen. They know what's at the end of the tunnel because they've been through it. The market's been here for many years, right? And we're going to get into that in a bit, but like, the market's been here for over 100 years, right? I'm pretty sure, right? Like almost 100 years. And it's like, it seems like every time, it just it just seems to, constantly just go up, right? Like, it's like, come on, like, is it really realistically going to be going down for the rest of time? Like, no, obviously not, unless America ceases to exist. So yeah, anyways, so I don't know why I added this, because I'm going to go over these in the steps, but first of all, stop going crazy over short-term stock moves. Like, come on, like, if you're going crazy over like Palantir up down 5%, you're like, oh my gosh, what am I going to do? Like, knock it off. Come on, like, this is like, seriously, you gotta get used to this. Pay attention to stock market crashes in previous years and be grateful for what we're having now, right? So far, let me just show you with the little ruler tool. As you can see, so far, I'd say from our high, we're about 5%, 4.28%. Like, come on, it's not that much, right? Like, not that much. Let me show you another crash we've had. For example, that was at the beginning of the year, nothing crazy. But okay, so like 2022, right? From the recent high to the low, what is that? That's about like almost a 25% crash, right? Let's check COVID, right? 2020, right? Oh, let's see, 30% drop, right? Like, come on, right? Like, let's see. Oh, financial crisis, 2008. Like, come on. Like, what is it? Oh, for almost 50%. Like, come on, dude. And you guys are worried about this little like 5% thingamajiggy? Like, come on. Like, on the graph, on the stock chart for TradingView, like, it looks bigger than it is, I promise you. But that's just because prices are different. You have to know like proportions. Like, it's different. Anyways, so I just want to say, don't pay attention, like, look in the previous years and you'll realize this is not by any means a crash. I'm sorry. If anything, this has so far been a correction, a minor correction. If it goes below 10%, 10 to 20%, then I would say it's going to be like a crash. But come on, we're still in the 5%. This is so far just a a minor correction. Anyways, then I said don't pay attention to over dramatic people, but pay close attention to the real news, because like people, for example, on Twitter, right, on X, right, they're like, oh my gosh, what's going on? It's such a bloodbath. Go sell your Palantir shares. What are you doing? Like, you gotta start investing in bonds, other things. Like, come on, dude, the market's crazy. And they're over dramatic. They don't have the adequate facts to back up their opinions. But I did say pay attention to the real news, right? Like, what is specifically going on in the market? Trump, enacting tariffs. Like, you got to pay attention. Like today, Mexico and Canada tariffs. Like, you have to pay attention. Like, what is moving the market? And so far, it's been pretty much based around him. But yeah, so make sure you're always on Yahoo Finance, on YouTube, everywhere that you get your news, Market Watch, Seeking Alpha. Everywhere, like there's some good places, but don't like go on like Twitter. Like, a lot of things on Twitter are like seriously like, oh sorry, there's a Amber Alert. So yeah, make sure you're always like paying attention and keeping up with what's going on, not just like public opinions on Twitter by random people. So yeah, let's get into the 5 things that I derived from Warren Buffett. All right, so the first thing we kind of just went over, right? Like, stop losing your mind over short-term price moves. I said don't check your portfolio / trading view every 5 seconds. Once a day is plenty, right? Like, this is something that really tripped me up in the beginning, right? For example, like, I would always be like looking at trading view every 5 seconds, like, oh, it's going up. Oh, during the day it's going down. Like, during the day it's going to go up, down, left, right, sideways, forward, backwards, whatever, right? Like, but you just want to know what is it at the beginning of the day and what is it at the end of the day. Like, you don't need to be checking every 5 seconds, addicted to your phone. You don't want that, right? Because that just causes stress and just stress and anxiety for no reason, right? And I said keep up with the change in the price, but don't constantly dwell on it, right? Like, make sure you know what prices your stocks are at. Like, you should know what's going on, be self-aware, but don't constantly look at it and worry, oh my gosh, what's gonna happen? Oh no, right? Like, come on. Like, anyways, I said realize you don't have the power to change prices, but you do have the power to trust yourself in the decision you made, right? Like, I'm a big shareholder of SoFi, right? Like, I bought shares, but I know that I personally can't change the price as much as I want to, right? As much as I know the price should be higher than what it's at right now, I don't have the power to change it. And what all I can do, literally all I can do, and all anybody can do, right? Like, all anybody can do, like, name any investor, right? Like a Warren Buffett, all he can do is just trust the decisions that he made, right? Just trust what he did is right and just wait. And that's all you could do. There's nothing you can do. Any YouTuber you go and watch right now, as much money as they have, they can't do anything. They can't change. You're just a small fish in this big market. No matter who, even if I had $1 billion in my bank account, I'm still a small fish in this big market, right? Like, I can't do anything. And I said, remember, we're in this for the next many years, right? Notice I didn't say weeks, months, quarters. I should have said tens of years, right? Like, we're not investing, right? We're not investing for the next couple days, right? Like, come on. Like, how long do these crashes last, right? Like, here, that in 2022, right? Fed starts raising rates. Like, how long is this? A year, maybe a year and a half? Like, come on. Like you look at the even 2008 financial crisis, right? Okay, that left us in quite a bit of problems, but maybe it lasted like 3 years. Like, if you can't wait 3 years when you're investing, like, don't even invest. Like, please don't. Just don't. And then I said, we are by no means day traders, right? And if you are, please click off this video. I said, if you are a day trader, please click off this video. And yeah, so I seriously mean that. If you are a day trader, please, like, this is not the channel for you. You're in the wrong place, wrong classroom. Just seriously, like, this is for only long-term investors only. All right, and then like we were saying earlier too, so number 2 is take advantage of these dips in the market, right? Like, don't just like say, oh no, this is terrible, my stock's down, what am I gonna do? What you can do is you can use this as an opportunity to continue to load up on your foundational stocks, right? I'm not saying like, oh, for example, it's really popular right now buying HIMS stock. Like, I'm not saying go and buy the dip on HIMS or like some kind of, crazy random like grab. Like, that was like a new stock people were talking about on Twitter. Like, no, this is the time to load up on your foundational stocks, right? Like an Amazon, a Meta, other big ones in your portfolio. Like, I don't know what are your big foundational stocks in your portfolio, but this is the time to load up on them. Also, you can even use this time to start completely new positions in strong companies, right? Like an Amazon, or I don't know. There's so many. Like Nvidia is a great one too. Microsoft, I'm just naming Mag 7. A lot of people think like AMD, for example. You know what I mean? Now it's at it's a very low price for what people think it's worth. Like if this is one of the stocks you really believe in, you know what I mean? Wow, I didn't even notice Ellie and Lilly's been absolutely on a tear. I didn't even notice that. But like health sector, like NVO, I don't know, CVS. Like you want to buy these stocks at great prices. Like now is the time. Anyways, and I said, pro tip, you should not just be buying companies because their stock dropped, but because that would be FOMO, right? Like, for example, so like Hims, for example, right? Like people are saying like, oh my gosh, just, buy the dip. Like, come on, guys, it's so low right now. Now it dropped all the way to $50. Oh, now we're back at like there is not enough value, not enough profits to even back up this company, and people are just buying it based on hype and just saying, oh, buy the dip. But you know what's really important that I learned is that the evil twin sister of buying the dip is FOMO, right? Like you don't want to just FOMO into a stock, because then that stock's going to go down and you're going to be like, oh no, what, like you have to, even if a stock that I own goes down, I'm going to be like, okay, I still put in the effort to research this, so no matter what happens, I know I did my best, right? And then I said you should buy these stocks because you notice an obviously wrong price set by investors. Like for example, I'm investing in Amazon right now. I'm loading up on Amazon. Why? Because I know right now this was an amazing earnings call, right? This was an amazing earnings call. The only thing wrong was a little bit lower than expected guidance, right? Like, come on. Like they beat on double beat, right? Top and bottom line. Like, why are we at 205 for Amazon? Like, I'm just saying, like this is a really imbalanced in price. All right, so number 3 on the list is dollar cost averaging, right? Like this one's so simple, yet it's so integral to your investing. This is just absolutely so important. And Warren Buffett, obviously he's talked about this many times, and it was talked about in The Intelligent Investor by Benjamin Graham, which, Warren Buffett learned a lot of things from. But yeah, it's really, really important. Why? And if you don't know what it is, it's slowly buying over time so you get the best deal, right? It's like, let's say, Amazon cost $100 today. You're going to buy, a couple shares now. Okay, wait a week. Okay, now, I don't know what price it's at. It's at like $80, right? Now, okay, you'll buy again. Okay, now the price at 110, right? Okay, you'll buy. So you're just keeping buying. You know what I mean? You're not putting all your money all at once. You're slowly distributing your money over time so you can get the best average, price buying. You know what I mean? And yeah, so, this is the best because, most noobs will go all in when they see one dip and are stuck with the consequences, right? For like the Hims example, right? Noobs will say like, oh my gosh, it's so low, it's 52-week low. We have to invest everything. Come on, like this is the biggest dip, and they'll be stuck with the consequences because now they have all their money in the stock and now they gotta wait for that to become profitable, or they're just gonna, sell for a loss. So it's a lose-lose. So, but some people instead are like, okay, this is a speculative stock. I'm gonna put a little bit of money right now. Oh no, now it dropped 20%. Okay, maybe I'll buy a little. You know what I mean? It's like as the stock goes up, you'll buy less and less and less, but as it goes down, you'll buy more and more and more. So it's like, it's the best way to get the best average buying price on the stock. All right, and number 4 is understanding valuation multiples and what they should be for different companies, right? So what I said is, although a stock might drop, right, its valuation might still be way too high. For example, Tesla. So like, let's go to Tesla, for example, right? Like it's huge drop since its all-time high, right? Almost like 480, and now we're down 280, right? It's like $200 drop, insane. And people see this and think like, oh yeah, super duper undervalued now. I don't know. Let's go search up Tesla real quick. Last time I checked, the PE was still 139. Like, what? Okay, the PE is still, but like, forward PE 110, 2-year forward PE 79. This is by no means undervalued. You know what I mean? Just because the stock price drops doesn't mean that it's undervalued, right? Like I just want to show you like if like price to book, like this is much higher than most stocks. Price to free cash flow, for example, it says most stocks traded 2025, right? Like I love 1000x, by the way. Shout out to Jeremy. But yeah, so like I just want to tell you, like, watch out for that. There definitely are some stocks that are at much lower than like that are much lower priced than usual, but they might not be super undervalued to the point where like you should be loading up on them, right? But like for example, like an Amazon though, which I love, it's I'd still say it's a great valuation. Like let's check an Amazon, right? 37p, 2-year forward P 28, beautiful, right? And the stock price is dropping, so I can get this at a great valuation. Let's check Meta, right? One of my favorite stocks too. 27 forward P, 23 2-year forward P, beautiful, right? Like I love to see it. You know what I mean? So that's what you like to see when stocks that are have great valuations as they're dropping. That's when you want to buy. You don't want to buy stocks just because they're dropping. Also, what I mean? Yes, I said you need to realize what kind of premium are you paying for this company. Like, are you like for Tesla, you're paying a pretty darn big premium, which by that I mean like how much, times the actual value of the company are you actually paying. And I said when people don't know these metrics, for example, like, for like a P ratio, right? Like this here, I'm talking about like PE ratio, right? They get in big trouble because they buy ridiculous valuations. Like what I was trying to get at in this is that you need to understand, like if you're watching my videos and you don't understand what a trailing 12-month PE or sorry, my camera's blocking. I'm sorry. A forward PE or a 2-year forward P is, then you got to learn. Like, come on, like seriously, you got to learn like what it is. I'll give you a quick definition right now. So if you didn't know, now you know. A trailing 12-month PE, basically you take the price of the current stock, divide it by its earnings per share on a trailing 12-month basis, and you get this multiple, right? And this kind of tells you that it's like 27 times worth, what the company is, you're paying 27 times what the company's worth. And yeah, so then I said like, that for different companies it's going to be different, right? So like a Meta or for example like an Amazon or a Tesla or even a Meta, like a Mag 7, like growth stocks, like those will usually have a much higher PE ratio, right? Because they're more set to grow in the future. Whereas like I don't know, like a CVS, I'm pretty sure that's like a CVS, right? Like that's only a 17 price to earnings, right? Like it's only 17 times. So that's what you have to realize. Like different companies will have different like regular PE ratios. And yeah, so I said don't just base your reasons on buying on BS, right? Like know what you're buying into and be happy with the valuation you're buying at, right? Like there is definitely strong cases for Tesla right now. I'm not going to deny that. Or an Nvidia, right? Like an Nvidia, like if you look at the trailing 12-month PE, right? Like it's at 38 right now. People might say, "Oh, that's too high." Some people might say, "Oh, it's so low," right? But like when you're buying it, you should know like, okay, I'm paying 38 times the price, right? Like know that. Right, like their forward price to sales ratio is pretty darn high, and people might say, "Oh, that's so much," right? But people know, you should know what you're buying at. You should know like, okay, I'm buying it at this, premium, and I'm happy to do it at that. You know what I mean? Like people are buying Tesla right now. They're buying at 139 times. And listen, if you really agree with Elon Musk and you see what he's doing, you're like you agree with the speculation, then it's worth it for you. All right, and then number 5, I said use this time to learn, right? This is a big one that Warren Buffett talks about, is that instead of, I said, like, instead of always paying attention to the current, paying attention to unimportant things like current prices or dramatic, or or drama, I said start learning, right? Like, instead of always looking at your portfolio, right? Like me, I haven't even looked at my portfolio in like the past 2-3 days, right? Like I don't even want to look at it. What I've been doing instead is just reading and watching YouTube, right? Like reading, Yahoo Finance, reading Market Watch, reading all these articles, just learning. And, instead of, always just looking at the price, because I know, soon this is going to go away. All the, new noob investors are just going to be washed away, and I'm just going to be, back up, in the market, and I'm going to have a ton more knowledge. Yeah. So I said, this helps you take your mind off stressful things. Like seriously, like, if instead, you stop looking at TradingView and you start, or if you're reading a book, or you start, looking, reading the news, it's much better for your mind. And yeah, so I kind of reiterated this. You can't change the market, but you can learn about what moves it, right? So I'm not saying, you don't change the market. You personally can't do anything, right? So I can't even do anything. There's nothing I can do, right? But I can learn about what changes it. For example, tariffs, right? Donald Trump, and Elon Musk, and, the things that they're doing right now, right? Like, that's been a really, really important thing. And yeah, so I just said, all you need to do is sit back and relax and watch, just noobs get destroyed. And I'm saying, if you're new to the market, that doesn't mean that you're a noob, right? Noob means that, like, you choose not to learn and choose to be ignorant and not, spend, your money effectively, right? And you choose to, get stressed out and sell out of this market. All right, so I just want to quickly go over this quick, little scenario that I like to go over. So I don't know if you've ever been to Universal Studios. If you're not from America, you probably haven't, and that's okay, right? But there's this ride, where you go on like a little tram. It's like it takes you around the whole park, right? It's a pretty cool thing. But eventually, this little tram bus goes into like one of these movie studio things. And in the little movie studio, for example, on the right here, it's going into this King Kong Island thingy. And on the sides, right, like you're put into like a simulation, right? Like there's like screens on the sides of you, but it looks really real, right? It looks like there's a King Kong about to like kill you, right? So the thing is, the train goes inside of this little room. It's, chaotic, see on the screen. But then in the end, the cart drives away, right? The cart drives away, and, you go back to the entrance of the park and everything's fine, right? That's kind of how I like to describe, markets like this, where it's like, right now we're going into like one of these little rooms where it's, gonna be all chaotic, like, oh my gosh, King Kong, it's gonna kill us, oh my gosh, there's a dinosaur, oh my gosh, what's happening, oh my gosh, it's crazy, right? But we know, right? We know that at the end we're gonna go out, right? And that's what all the seasoned investors know. They know that the tram is gonna go out of the other side, because this happened many times, right? It's not the first time we've been on this ride before, right? Like, right? Like, this isn't the first time we've been on the ride. Like, let's check, right? We were on the ride here, right, at the beginning of the year, the yen carry trade thing, or maybe that was here, but it's still same thing, right? Same scenario, right? And then we got in all of 2022 and 2023, right? Like people were so worried, it was dropping, and then, but we knew what was gonna happen, COVID, right? We knew it was gonna, like, we've been on this ride many, many times. Like, it's been many, many years. Like, you can go back, oh my gosh, like 2000, 2001, like, oh my gosh, to World Trade Center. Like, still, investors knew what was happening. We knew at the end we're going to be okay. And that's all that happened. And that's it. You know what I mean? Like, in the grand scheme of things, like, let me just draw this. Like, are we going to, oh no, we're forever going down, forever. Like, the only way that this would happen is if America was ceased to exist forever. Like, I'm telling you, like, that's how it will work. But, like, do you really think that's going to happen? If you think I think if that happens, we have a bigger problem on your hands than our little investments. I'm sorry. There's a much bigger problem. But yeah, so that's what I just want to show you. So, like, remember, we're just going through this little, like, simulation, chaotic scenario right now. But in the end, we know what's going to happen. So anyways, all right, and then 2 quick quotes that I like to show, that I think about is, one, stay strong and stay long. And set and forget. Set and forget is a really important one that I love. That's just, think about it. You do all the research. You spend hours researching the stock. Listen to the conference call. You look at the valuation. You look at the price estimates. You literally analyze. You do a SWOT analysis of the business sustainability. And, eventually you click the buy button. You decide that, okay, this is a good investment. This is the right investment. And then all you have to do from there is just forget about it. Literally forget about it. Like, it doesn't matter. From there, it doesn't matter. You're not going to be buying or selling. Just buy and then forget. Literally forget about it. And that's fine. That's totally fine. If you go ahead tomorrow and go buy shares of Amazon and then just forget about it for like the next 2 years, like, that's totally fine. Maybe you could just be keeping on adding and adding more if you want. But like think about it. Your work's done. Your work is done here. There's nothing else you could do. So that's why you got to set and forget. You can literally forget about it if you want to. Like me, I just like to look at, I like to look at the market because I'm interested in it. So this is another quote that I like by Warren Buffett himself, where he said, be fearful when others are greedy and be greedy when others are fearful, right? Like people were saying this a lot, past year, because think about the market's been pretty greedy recently. Price been increasing like crazy. People have just been swarming into the market, and people are like, oh, when everyone's greedy, you should be fearful. And then look what happened, right? But now we're in a time when people are fearful, right? Like people are very fearful right now, if you couldn't tell, right? And that's when you got to be greedy, right? Like if you want to be loading up on shares right now of good stocks, this is when you should be greedy. Like really don't hesitate to overbuy. I thought this one was cool. I actually just saw this right now, but what we learn from history is that people don't learn from history. And it's honestly so true, especially like if you look at the past, like just like literally just like statistically, if you look at the past couple crashes in the market, or what I mean, all the crashes in the market, like you'll notice what's going on right now is nothing. It's absolutely nothing compared to what's going on. This is just a minor correction at most. I'm sorry. Like, okay, it could keep going down. It could become a crash. I'm not saying it couldn't. But so far, like, this is not something that you should be, like, tearing your hair out over. And then this is my absolute favorite quote by him, is that the stock market is a device for transferring money from the impatient to the patient. Basically saying the stock market helps, it rewards the patient people. It takes money away from the impatient, the day traders, right? And it gives the money back to the long-term investors like me and you, right? So that's, anyways, that's the end of it. Thank you so much for watching. Let me know what else you think. If, you think I'm totally wrong, let me know. If you think something else, let me know. If I helped you, let me know. So thank you so much, and see you.